Do you want to win a bidding war when buying a home in 2025? If you have at least 10% as a down payment, you are sitting on a superpower that I promise you and your realtor probably don't know exists. You could offer a $25,000 appraisal gap guarantee, and even if it appraises up to $25,000 lower, you can buy the house with the same amount of money out of pocket. Want to win the bid on your next dream home offer? Stay with me because we're going to talk about it in today's video. I'm Peter Lindquist. I've been a mortgage lender in Minnesota for over 30 years, and I want to share some of that experience with you today. Hey, if you like today's video, be sure to give it a thumbs up. You know, it means an awful lot to me. It does a lot to support the channel. And if you're buying a home, subscribe to the channel. And if you've got questions or comments, leave them in the comments below. A bidding war means the seller has multiple offers at the same time to consider, and they get to choose who they're going to sell the home to. Ultimately, they want not only the best price, but also the most secure offer in terms of whether or not it's going to close. So either cash or financing that's as close to cash as possible. So I encourage you to consider what the competition is doing. I'm talking about the other buyers who are making an offer on this property. Have you heard of an appraisal gap guarantee? This has become a common strategy over the past few years. And what it's telling the seller is, hey, I'm offering you $500,000 for your home, but if it appraises to $480,000, I'm still going to go ahead and buy it. That's called a $20,000 appraisal gap guarantee. That's a big deal because the seller knows that in most cases, a property appraisal is required for financing. So they've taken their house off the market while you're getting your financing together. One of those things is an appraisal, which can take a week or two to get done. If the house appraisal comes in low, they've got to put their house back on the market. So if the seller has two choices, all else being equal, they're each $500,000. One of them gives an appraisal gap guarantee of $20,000. That's a really big motivation for the seller to take that offer. But here's where you've got a sleeping superpower in your financial situation. What if I told you you could offer a $25,000 appraisal gap guarantee on that same property without the threat of you having to source and come up with an additional $25,000? So while your competitor might have an additional $20,000 in the bank, you're offering an even better deal than theirs, whether you've got the additional 25 grand or not. So what kind of magic is in these numbers? Let me explain it to you. I'm going to give you 3 different scenarios with various down payments. It only works with a minimum of 10% down or greater, and you'll see why in a minute. If it appraises at $500,000 or higher, we're doing a loan amount at 90% of the value of the home, $450,000. Because you don't have at least 20% equity, you're paying monthly mortgage insurance. Now, the cost of mortgage insurance varies widely. I'm going to use a factor of 0.2% as an example. That works out to $75 a month. Now, what happens if the house appraises low? Anywhere between $499,999 and $475,000. The way we keep your cash out of pocket the same is we're going to lend you the same amount of money. Remember in the last scenario, it was a $450,000 loan? We're going to do the same thing, even though the house appraised at $475,000. And the reason why? We can do loans up to 95% of the value of the home. So the mortgage insurance, let's use an example rate of 0.3%. That would work out to mortgage insurance of $112.50 a month, or $37.50 more than if it appraised to $500,000. So yes, your payment goes up by $37, but your cash out of pocket stayed exactly the same. And you know why? Because the loan amount stayed the same. So you're still paying the $50,000 between $500,000 and the loan amount of $450,000. That part hasn't changed. The only thing that's different is the mortgage insurance rate. So the question to you realistically is this house worth $37.50 more per month if you win this bidding war? Keep in mind, you're probably going to refinance this loan at some point in the near future and get rid of the mortgage insurance anyways. Also keep in mind, this only comes into play if the house appraises between $475,000 and $499,999. And of course, if you do have the extra cash in your bank account, if you want to use it, go ahead. I'm just saying that if you don't want to or don't have the additional cash, you can make a $25,000 appraisal gap guarantee and make your offer one with a superpower. And this works for bigger down payments as well. Let's look at 20% down. Same idea, $500,000 purchase price, $25,000 appraisal gap guarantee. Now in this case, I'm going to avoid the whole monthly mortgage insurance part, and I'm going to suggest a mortgage insurance called single premium mortgage insurance, where you pay a single lump sum once and then never pay it again. And that lump sum can actually be financed on top of the loan. Now that mortgage insurance rate varies a lot also, depending on number of borrowers and credit scores, etc. But an average rate might be 0.3% of the loan amount. Your loan amount is $400,000 and 0.3% of that is $1,200. So if you offer $400,000, we're going to lend you $400,000. If it appraises to $500,000, no problem. If it appraises between $499,000, $999,000, and $475,000. Worst thing that could happen is you've got a single premium mortgage insurance that you would pay of $1,200. And that wouldn't even have to come out of pocket. You could add it to the loan amount if you wanted to. So this one is even a little easier to understand. If you're up against a bunch of other offers, think of it this way. You're paying a conditional $1,200 insurance fee that if the house appraises low, you would have to pay $1,200 that's financed on top of the loan. Paying $1,200 more for this $500,000 home. I mean, if you knew you could win the bid for $501,200 instead of $500,000, wouldn't you make that offer? All right, now the third scenario, and this is even crazier. Let's assume you've got a large down payment, 50% down. Now we're lending you $250,000 and you're paying $500,000. If it appraises to $475,000, do you think that means much to us as a lender? It actually doesn't. There is no change. There's no mortgage insurance. It's the same cash out of pocket. You don't have to come up with extra money just because the house appraised low. I see buyers with large down payments losing out on their offers all the time because they don't know the sleeping superpower that they have in the appraisal gap guarantee that, at least in their case, it basically means nothing to them if the house appraises low. Now, am I advocating for you to buy a house that is worth more than what the appraiser says it is? I'm not saying that. I'm giving you an option and letting you know what some of the competition is doing. I've heard from some buyers and realtors that they're saying, hey, appraisers are kind of stuck here. In a rapidly appreciating market, they're looking back over the past year, and it can be very difficult for them to keep up with market valuations because they've got to compare this house to homes that have sold nearby within the past 12 months. That can really bind an appraiser in terms of what that valuation is going to be. But also, buyers are looking at it and saying, so it appraises 5% lower than what I paid for the property. If the market appreciates 3% a year, in 2 years, I'm caught up. But that's something for you and your realtor to talk about as to whether or not an appraisal gap guarantee is right for you. But if you decide it is, this is your secret weapon in a bidding war. You can offer an appraisal gap guarantee without the threat of having to come up with additional cash under the right circumstances. I want to make a caveat and say that for the lenders that I've worked for over the last 30 years, this has been true for all of them. But you would want to ask your mortgage lender to make sure their guidelines are the same before you pull out this magic weapon and win the bidding war. Hey, thanks for taking the time to be with me today. My name's Peter Lindquist. Subscribe to the channel, and I look forward to seeing you next time.